holds, it's telling us that people are coming back to risk. At some point, they will finally take a stab and say, okay, we've made money in the NASDAQ. Now is the turn to make money in crypto. And kind of an interesting period in crypto because we've just seen that big flush that took us below 20,000 to about 17.5. And then very quickly, the next day, we recovered back above the 2017 highs. So I think for me, that's the line in the sand right now, is that you can go below a previous pivot high, a major level like that, but the recovery is important. If we didn't recover and we were still below that level, it would signal near-term weakness. Right now, I actually think that we're in a position to maybe see a bounce over the next week or two, potentially back to 25,000, maybe as high as 28,000+, before, unfortunately, we probably see a little bit more downside. Yeah, so right now there's kind of this time factor involved where we got below that previous 2017 high, we recovered with a reversal candle, which is a technical bullish signal, and now we've just been going sideways. It's been very, very eerily quiet in the crypto markets, but we've started to see some altcoins starting to pick up. You know, for instance, we've seen Polygon have the monster move. In fact, let me bring up that chart here on Polygon. Okay. Let's take a look. So you can see this move on Polygon. It's just been ripping up to the upside. You know, it got as low as about 30 cents. So it's up about 100%. And then if you look at other names, like even Solana has been showing us some relative strength, breaking up here off of these recent lows. So even though Bitcoin hasn't started to really rip to the upside, some of these more beaten down altcoins are, and I look at them as kind of a little bit of a leading indicator. I think if you go back to Solana, for instance, when Bitcoin was topping, this was still holding up relatively well before it really started to fall dramatically. So it makes sense to me that these could be showing a little bit of a risk on kind of take on the crypto markets. And that could be telling us that Bitcoin could likely get a bounce in the next week. In addition, I think it's important to recognize that the NASDAQ 100 is having another monster day. We know that, you know, as much as we don't in the crypto markets like to say that crypto and stocks are connected, they are, frankly. The NASDAQ rip up, it's telling me that the risk on environment is starting to percolate again, and that's a positive for Bitcoin. One of the things to keep in mind, we're coming into the July 4th holiday week, next week, going into the weekend, and oftentimes that is a period where you'll see these type of moves get ready and kind of initiate. So I would be kind of surprised if we don't have a move up on Bitcoin in the next week and a half, back to at least 25,000. If you go back to last October and November, everyone was always asking me, well, what's the catalyst for this kind of flush out? What's going to happen here? And one of the things that I was comparing the crypto markets to was the dot-com bubble, right? So this is taking us back to the late 90s, early 2000s, where you had a very similar scenario with dot-com companies where there were so many of them. And I mean, I kid you not, some of these dot-coms were like run out of their parents' basement. They basically did nothing, but they got ridiculous valuations. You would see a stock that was a few pennies a share go to 10 cents, go to 50 cents, go to $3. I mean, it would become a mega-sized company that almost did nothing and really had no business being a legitimate stock. And we saw a lot of this in crypto, right? You've seen so many coins. I mean, now what do we have? 20,000 coins out there, and it's just not a healthy environment. So you know, one of the things I said back then is you need a deleveraging event. I mean, the bottom line is there's not space. I mean, think about overpopulation or the Darwinian impact. And I love referring it to Darwin and kind of survival of the fittest in terms of genetics, because it really does play a role here where there's just so much and you need to see that washout occur. So the fact that we're seeing Terra Luna collapse, we saw the UST, we saw the Celsius. I mean, this is exactly what actually should be happening, and it's not over yet, right? I mean, when you really need to see that when the dust settles, I mean, really about only 5 to 10% of cryptos should really have a functional, decent market cap after this. You know, otherwise, I just don't think it's over yet. I think in regards to the Federal Reserve, you're right in that there's likely another 50 basis point hike coming in the next meeting, maybe one after that. But I've long said that I do think that will end very, very quickly because, you know, the midterms obviously Generally, you'll see the Federal Reserve historically not do a lot of crazy monetary policy just before elections, whether it's a Republican or Democrat, because they don't want a market crash or anything to be looked at and said, oh, well, you guys are the reason this happened, right? So they kind of like to remove themselves out of the equation. Now, having said that, I think the tightening has been on purpose to bring down inflation and mainly oil, right? So tightening of interest rates slows the economy. That's what it does, because it sucks money out of the system. So less money to spend, less money to go around. It slows the system down. And basically that'll slow the demand for oil. So oil comes down. We've already seen oil this week. I think the high was around $124 a barrel, and we're right now around 106. So you're starting to see oil come down. My guess is oil will continue to come down because the economy will continue to slow. And then really what I honestly expect is by year end, the US economy is borderline recession. Early 2023, we're in a recession. And then you see the Fed potentially, especially if inflation starts to come in back to 4 to 5%, then you could see the Federal Reserve actually start to loosen again. One of the things I've kind of said is that you have the Federal Reserve dealing with a scale, right? So on one side, you have inflation. On the other side is their other mandate, which is unemployment. Right now, unemployment is super low. Inflation is super high, right? So you have one really high. And what they're trying to do is they're trying to bring the scale back down and rotate it. Now, as unemployment starts to spike up and inflation comes down to, let's say, 4 to 5%, now they're going to say, wait a minute. Now the scales are tipped the other way too much. We need to kind of stimulate the economy, and we'll deal with a 4 to 5% inflation rate, which stinks. Like, I mean, let's be honest. I liked it when it was 2 to 0%, frankly. I think a lot of Americans did. But that's now the new game. The new game is kind of whack-a-mole, where it's which one is the worst case here, and then let's do the opposite. So if inflation then spikes up again, they'll raise interest rates. If unemployment spikes up, they'll lower interest rates and stimulate, and it just goes back and forth. And this is not good for Americans. This is not good for the world. So it's kind of the demise. It's the beginning of the end of the financial system in the US the way it is now. So you're going to get in this kind of, back and forth with the Fed, where they're going to tolerate slightly higher higher inflation and still be willing to stimulate because they don't want to let us fall into this depression. And I think that's going to be the kicker, is that they're going to continue to try to do that, but then it's going to keep inflation elevated 4, 5, 6, 7% while they're doing, this avoidance of a depression. And eventually there's no good outcome here. You have to have that global reset, that US reset, where everything just finally collapses. And again, think about it like keeping a patient on life support, right? You're doing everything you can. They start to flatline, you do this, then they start to flatline, you put this drug in them. You're doing whatever you can to kind of keep them alive. But inevitably, if they keep flatlining, they're going to go, right? And that's the U.S. economy at this point, where you'll get to a point where you do get to that next Great Depression. And again, One thing to always remember, and this kind of sucks, but they say every generation has to go through a Great Depression. And again, if you think about the last one was in the 1930s, there aren't a lot of Americans left alive that remember the lessons from that. I think that the 4-year cycle has proved itself once again, in that, 2009 creation, 2013 highs, 2017, now 2021 was the last high. So as of now, all we have as technical, traders is to say that, okay, 4 years is what the cycle is, which kind of dictates that we should bottom out. Usually Bitcoin past cycles has bottomed out in that first year, that 12-month period. And then it kind of has a choppy period for about 6 months afterwards, before the next bull run starts. So, we're not at a year yet. So it still tells you that there could be some more downside. And then even after a year, you have to figure 6 months of choppiness before that next bull run. Now, my only fear, and this is kind of the unknown, and listen, no one knows this, is that this is the first period of Bitcoin where the Fed is aggressively tightening, and you're seeing this kind of, inflationary pressure forcing them to tighten and keeping them from printing at this point. But I will say this, do you think the next bull run will be the big one? And I know that sounds crazy because we've already seen big runs in Bitcoin, but my guess is when the market starts recognizing that the Fed is going to kind of do this whack-a-mole with unemployment and then inflation and then unemployment and inflation back and forth, there's no good end to this. And that's where Bitcoin is going to be, that next big bull run that easily takes us north of 65 and maybe 100, even a 250 or 500,000 per coin. Now, again, I think by this point, a lot of the alts are gone. You probably have a standard kind of maybe 50 cryptos that are now surviving. The top couple will be the blue chips like an Apple or a Microsoft type play. Those would be Bitcoin and Ethereum. And then we'll have to see how it all plays out after that. But I do think the next run is going to be the run of mass adoption, where the public starts to recognize the end game for the US dollar and really for central banks around the world that are just doing this and repetitively printing every time we get into this mess. Absolutely. So just talking about the 25,000, maybe 28,000 target, let's do some technical analysis work here. So one of the reasons why I thought that this was a short-term bottom was because of a couple factors. Number one, the obvious one is that we pierced the 2017 highs, right? So just naturally, that's going to be a massive level where people are saying, okay, maybe this is the low in the charts. But more importantly, you see this down candle here, and then look at how we broke below and we closed below that 2017 high, but very, very quickly we reversed right back up. That's what we call a bullish reversal candle. So in technical analysis, that's a positive. Now you're just going sideways here. And one of the things I'm paying attention to is the stock market, because it also can be a leading indicator of risk on. So we've seen now the stock market starting to catch a bid. Assuming that holds, it's telling us that people are coming back to risk. At some point, they will finally take a stab and say, okay, we've made money in the NASDAQ. Now is the turn to make money in crypto. And I think that's where you get this push up. I think it's important to look at it and say, where are people investing it in, right? So, now you have a majority, and this is kind of crazy, but a majority of holders, I think something like 70% of Bitcoin holders are now underwater significantly. So again, that kind of, for them, it's obviously feeling pretty risky at this point. Even though, yes, I mean, Bitcoin in 2009 was pennies. Versus where it currently sits. So it's been an incredible, incredible mover, which to me, it bodes very, very well for the long-term survival of it, that type of thing. But I still think if you compare the NASDAQ, for instance, to Bitcoin, obviously the NASDAQ's not dropping 85% every 4 years. So I'm just trying to compare apples to apples in that respect. If you see this drop here, this kind of vertical move, if you take that distance here to this low, which was the Terra Luna collapse, that distance is about $14,000 on Bitcoin from this high to this low. And then if you look at this sideways consolidation and you take this high right here to the low down here, this is also $14,000. In the world of trading, we call that a measured move. And it usually denotes a short-term low because you've kind of completed the equal distance of the move. And then really in terms of resistance, if we do get a bounce, you have to respect this low right here. This 25 and change low, that's going to be resistance. And if you continue up, this is really, I mean, look at all this choppiness right here. And if price comes up underneath, that's going to be significant resistance. So I would say this is my low end target in the near term here, and this would be my high end target. At which point, I'm still in the camp that we probably do have more downside, just because I don't think we've seen full out despair. People are upset. They're hurting. It's horrible. And let me just say this, is that when I made the call for 20,000 Bitcoin in last October, November, by no means do I hate Bitcoin. In fact, I love Bitcoin. But as a technical trader, my job is not to love or hate anything. It's to be a neutral party where the chart dictates what I do. And that's what it is. It's like, when it bottoms out, I'm going to be all in, not all in one asset, but I will be fully invested with my diversified portfolio in cryptocurrencies. But the chart has to tell me that first. And I think that's an important distinction because it takes emotion out. And emotion is the worst thing for investors. It makes you do the wrong thing at the wrong time almost all the time.
People have already been taking advantage.